Have you ever donated something to a thrift store, like this lovely teacup, for example? And then like a week later, you're shopping in that same store and you come upon this lovely teacup and you're like, that is so pretty. I should totally buy that. Even though it's the same one you donated just a week before? Well, Treasury Stock is kind of like that. Welcome to Accounting How To. I'm your host, Carolyn Grimm, and my sidekick, Terrence, and I are here to put the fun in accounting fundamentals. So what exactly is Treasury Stock? Well, when a corporation issues stock, meaning it sells it, there are times when it makes sense for the corporation for some strategic purpose to repurchase some of its own stock. So the corporation purchases the stock back and it holds onto it until its strategic reason comes about. So it may be that the company is trying to prevent a hostile takeover, where some group is trying to buy up all the stock that it can so that it can get control of the company. It may also be that it wants to use the stock to reward its executives. And it may be that they want to try to raise the market value of the rest of the stock by decreasing the number of shares that are on the market. So the result of buying back stock and holding it is that stockholders' equity decreases. Every stock represents a piece of ownership in the company, equity. But when the corporation itself buys back the stock, then the stockholders have fewer shares. Now, in the chart of accounts of a corporation, there is an account called Treasury Stock, and this is where we track the value of that stock. Treasury stock is a contra equity account. In accounting terms, it works the opposite of an equity account. An equity account has a normal credit balance, so a contra equity account has a normal debit balance. It works the opposite. Now, if you're watching this video because you're taking an accounting class, I've got some really good news for you. Stock transactions can really trip you up. That's not the good news. The good news is that Terrence and I have your back. So for more in-depth information about stocks and paid-in capital and dividends and all the journal entries you need to ace your accounting homework, jump over to the Accounting How To website. The link is in the description, but it's easy to find. It's accountinghowto.com. Until next time, stay balanced, my friends.